Well, the housing market, as you know, was extremely strong in the late 90s and early 2000s. As that process continued, it got to a point where there were lots of loans that were made to people, mortgage loans, that either those people shouldn't have taken out those loans, or the lenders should have known that some of these borrowers wouldn't have been in a good position to be able to repay those loans. So the major, so in that circumstance, those were the sorts of loans that were often categorized as subprime, that the people who took out those loans had credit scores that wouldn't have been high enough generally to qualify them to borrow. And again, sometimes they should have known better, and sometimes the lenders should have done a much more careful job of screening the applicants for their employment history, for their credit history, generally for their credit worthiness. A lot of those loans were not held on to by the banks and the other financial institutions that made those loans. In many cases, they sold those loans off to third parties, and those third parties wound up repackaging those mortgages and basically turning them into bonds, and that's what they call mortgage-backed securities. They were backed by basically the expectation that the people that borrowed the money for the homes would pay it back with interest, and then the issuers of the mortgage-backed securities could pay the people and the parties that bought them the interest that they were owed, plus plus the face value at maturity. Oftentimes that didn't happen because the people wound up defaulting on the loans that they took out. Right? Now, as far as the mortgage-backed security, so obviously that's happening a lot less today because a lot of the lenders took big losses on those sorts of loans, and some people that bought mortgage-backed securities did not receive the interest that they were promised. So the market, there are still some mortgage-backed securities being issued, but the quality of the mortgages that are backing them up are much, much higher. They're being backed by prime loans. The concept of a mortgage-backed security, there's nothing fundamentally wrong with it. It really all depends on whether those mortgage-backed securities are backed by prime loans or not. As long as the lenders are being diligent in checking on the credit history and the employment history of the borrowers, and as long as those lenders or the borrowers know what they're getting into and they can really afford the monthly payments, there's nothing wrong with having mortgage-backed securities. So as far as the future goes, if those mortgage-backed securities are backed by prime loans, I think that's a perfectly legitimate financial instrument. So the big problem that arose was mostly due to the fact that some lenders, this is not we're not talking about every bank here or every mortgage lender, but some mortgage lenders didn't screen the applicants the way that they should have, and some of the applicants, some should have known better. Others were outright deceived. So the problem was more on kind of the oversight those lenders and those borrowers, and not fundamentally a problem with a mortgage, with mortgage-backed securities in general. But they have to be backed by good loans. So to the extent that they are in the future, I think they're a legitimate bond product, and people shouldn't be reluctant to purchase them. But that's going to take a while, because in the real world there have been substantial losses for some parties, and people don't forget that quickly.